Good evening and welcome to the ShadowTrader Video Weekly for Sunday, February 10th, 2013. Happy Chinese New Year. Okay, we had day one of a breakout on Friday from a trading range that I'm going to define right here over these sessions right here. That was our trading range, and Friday was day one of the breakout. So I'm a big believer that when you have day one of the breakout, you generally either want to kind of go out long or not really be selling the breakout the next day. I'm still maintaining that the target for the S&P has to be somewhere in this range in the 1540. Something that I was looking at on Friday is the fact that when we broke out here, which is from approximately the 1490 level, you can see that the market traveled about 25 points before it paused, because it didn't pause really until it got right into here. So I'm kind of using that as a barometer of the same level, thinking that the breakout level here is now, from approximately 1510, right? So if we add another 25, puts us to 1535, and that gets us, closer to our target here of the channel. So that's something that I continue to be looking at, and that's where I think the market wants to crawl to in subsequent sessions. One thing that is interesting is the Dow continues to flirt with some records here. I'll go out to a monthly here, and I am keeping an eye on the prior resistance here, which is at 14,198.10. I've mentioned that in past videos. So I think a lot of this is going to kind of tie in. And of course, we do have an NDX and a NASDAQ that are just starting to break out on their daily. Here's your NDX, is just now broken out, so I think there could be some more room to run there. And the NASDAQ composite is actually right up against resistance just now. So as I said before, this is typically how the averages act. They will be out of sync, where you'll have one leading the other, others coming right into resistance as the others are breaking out. And then what I think what it does is it ends up sucking people into the wrong one at the wrong time, thinking that everything's in the clear because one of the other indices is broken out, the other one's just coming into resistance, etc., etc. So that's the way I see things. So I think definitely a little bit more upward momentum in the coming week, given that we are as of Friday just on day one here of the breakout, and it was a pretty big balance area, right? You had at least 6 to 8 trading sessions here, depending on how you look at it. All right, let's take a look at some trade ideas for next week, and then I'll update you on those futures trade ideas from last week. A couple of things that I think might be in play. DDD had an interesting pattern here, and actually broke down here through a dominant trend. I was looking at it kind of like this here, and you can see stock went like, oops, that's not a very good line. Let me redraw that here. Stock went kind of like this. There's your trend line, and this action here blew through that line, so it kind of fake some people out, myself included. I had it long, and then I ended up taking, getting it off at about break even. And now what's happening is the stock has consolidated here after a move higher, and I think that there could be another leg higher in the coming week. Notice that you've got a very, very tight range. This is a 3D printing stock. It seems to be very popular, and really the reason I'm mentioning this is because these stocks that are really kind of like the hot item of the moment, they tend to get parabolic, and they can go much, much higher than you think. And this one has big beta. You can see it moves like 10% in just a few days. So I'm pointing that out. SSYS is also in the space, but it's not acting as well. And if you like the youngsters, Exone, as I call it, has only traded a couple of days. This chart is only showing 1 day, which is an error. It's actually 2 days. You can see here they had an initial public offering on the 7th, and the stock has been strong since then. It's also in the same 3D printing space. All right, next item up for bids, as they say, LinkedIn. LinkedIn closed really strong on Friday on their earnings report. They had good numbers, or at least the street thought so. And you can see here that stock just took off to the races on Friday and closed very strong. Similar situation to the S&P, where I always say, you don't really want to be selling right after day one of a breakout. Stock usually goes higher. I think there's a few more points to be made in LinkedIn and probably moves up a bit next week, so I'll be watching that as well. ISRG has been relatively strong and is in this sort of tight consolidation range, whatever you want to call it, kind of like a Darvis box or something. And I think that there could be a break higher in the stock, because if you look on the larger time frame, on the weekly, I think what it wants to do is it wants to go to this level, which is the 595. So something that I was thinking about is possibly looking at an ISRG call ratio spread. You can see the ones that expire next week, which are the regular monthlies, options expiry, February 15th, that 590, 595 is about even money. You can see there's like a 5-cent credit there. So that's a possibility, of something I may be thinking about, because as you know, for the ratio spreads, what I like to do is put them on for even money or a credit and put the short strike right where I think resistance is going to be. They've already reported, so there's no event risk that it blows through there on a gap or anything. So that's something I'm going to be considering next week. I'm also going to be looking at a possible short in AutoZone. This trend line was drawn in yellow. I'm going to edit it here and put it into purple. Oops, I don't know why that didn't work. Hold on, bear with me. There we go. And so what I'm going to be thinking about in AutoZone is really just a day trade, depending on how the stock opens on Friday. If it opens up a couple points higher into this line, I think it's a screaming short for a day trade. It probably rolls back a few dollars. Even if it means that stock goes higher later, up to the 400 level, we'll see. But that's something that I'm going to be keeping an eye on. Let's actually see right now together if there's anything on the options, because you don't need to have weeklies because everything's a weekly here. So knowing that resistance is at 400, yeah, there's really no ratio to be had there. You can see that they're 10 wide. And to be buying the 390s and selling the 400s would be too expensive. It's a dollar debit. I don't think that really makes much sense to me, so I'll probably not be interested in that. Probably be looking more to just day trade the equity around these key resistance levels. All right, last one that I'm looking at also is Oxy, which is in a really tight consolidation range. I'll make this a little bigger so you can see it. Beautiful stair-stepping action. I think Oxy is a buy over the 88.80 level, and with a stop underneath the low of the consolidation. As you can see on the longer term time frame, it still has some room to run here, so Oxy could be in play. You can see resistance doesn't really come into play until up in here, over 92 or so, up in this area. So I'm going to be watching Oxy for next week. All right, update on the futures trades from last week. If you're following me on Twitter, you know that I got stopped out for 15 ticks, which is not bad at all on the 6J. I just basically, I got in on the entry and then I moved my stop higher. And then it ended up getting stopped out. The yen actually did have a big move on Friday to the upside. I'm not too disappointed that I'm not in it. I'm really particular about my fib levels, and I generally want them to hold, to the penny. I suppose I could have gone looser, maybe with smaller size, but I was trading decent size on the 6J, and thus I had to stop, like 1 ATR, a little bit, kind of tight, and then I tightened it up, as best I could, because I was noticing here, I didn't think that the yen should have failed the 50% retracement right away. Here's, where I got the bounce on the 50, it ended up, closing lower, didn't really, hold there, and then went a bunch lower, and then, since then it's recovered, but really just, not the way that I wanted it to play out for me. So I was stopped out for a small loss there. On the radar now is the sugar trade, SB, which is the next futures trade that's on the radar. I've got the trend lines drawn in here in this teal color, and you can see here, this one here, which is at 1763. I have to go out to the monthly so you can see it. It's actually from all the way back here, 08. Last week's video, I showed you an analysis of how I feel that this sugar chart is really having difficulty making new lows, constantly pushes a little lower, but I think the sellers are not getting much for it. Feels to me like they're, it's building up and getting shorter and shorter, and I think that there's a long-term trade here. My stop is going to be about 50 cents to $1 away. Again, this is a longer-term stop, so somewhere in that range, and I'm going to be looking for a move on the monthly, possibly as high as like up into the 20s. Okay, so if you don't know how to size this properly, remember this is obviously not a futures contract that most people trade. I certainly don't trade sugar very often. You would be using your dashboard function here, and if you need a refresher on that, please go to last week's video, which you can find in the archives section of the weekend updates under shadowtrader.net or on our YouTube channel, and you'll see that last week's video was very detailed in terms of how to use the dashboard function right here on your chart in order to tell you, what the tick value is, how much dollars per tick, and what your size should be depending on your stop, etc., etc. All right, that's all I have for today. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.